Right now, it looks like the world is watching an oil crisis unfold, and on the surface, that reaction makes sense. Energy markets are unstable, and governments across Europe and Asia are rushing into emergency meetings, and almost all of that panic traces back to a single place, the Strait of Hormuz, a narrow passage that serves as the only sea route from the Persian Gulf to the open ocean. And every day, about 20% of the world's oil flows through it, making it the most critical choke point on Earth. So the general assumption feels obvious. If something goes wrong here, the global economy is in serious trouble. But maybe that's just the version of the story we're being shown, and maybe it's only part of the truth because there's more happening beneath the surface. Because the real story isn't just about what's happening, it's about who it's happening to. Because oil shocks don't affect everyone equally, and they never have, because while some economies take a direct hit, others quietly come out ahead, and that's what this story's actually about. It's not really a crisis story, it's a story about positioning. But here's the problem. Most people still think this plays out the same way it did 20 years ago, where instability in the Middle East triggers an oil shock that eventually hits the US economy. And for a long time, that was true, because back then, the United States relied heavily on foreign oil. In fact, around 60% of its total petroleum consumption came from imports. So when global supply was disrupted, the impact was immediate. Prices jumped, inflation climbed, and the economy slowed down. It was a simple, direct relationship. But that version of the world doesn't exist anymore. Because over the past 2 decades, something changed. New drilling technologies unlocked massive shale reserves inside the United States, and production surged. And suddenly, the United States didn't just reduce its dependence on foreign oil, it completely flipped the dynamic. Because if you look at today, the United States is now the largest oil producer in the world, which means the old narrative no longer applies because now the United States isn't on the same side of the trade anymore. So now the real question becomes, who is actually exposed? And this is where the story really starts to change, because most of the oil flowing through the Strait of Hormuz isn't going to the United States. In fact, only about 2 to 12% of it does. The majority is heading somewhere else, to Asia, and more specifically to China, India, Japan, and South Korea. And together, these 4 countries account for roughly 75% of all the oil moving through the strait. So when people say a disruption here would shock the global economy, they're not wrong, but they're missing something important. It's an asymmetric shock, and it doesn't affect everyone the same way, because for the United States, a disruption mostly turns into a price problem, and that's because oil is priced globally. So if supply tightens anywhere, prices rise everywhere, which hurts, but it's still manageable. But for Asia, it's different, because it's not just a price problem, it becomes a supply problem too. And those are 2 very different situations, because higher prices slow things down, but losing access to your energy supply, that's when systems start to break. Where factories begin to slow, energy gets rationed, and production comes to a halt. It's the same event, but it leads to completely different outcomes. And this is where the story shifts, from crisis to positioning. Because when supply tightens and prices rise, it doesn't just create risk, it creates winners and losers. And right now, the United States is on the winning side, because higher prices don't just hurt, they also generate revenue for producers, exporters, and energy companies. And the United States happens to be the largest oil producer in the world, which means the same shock causing global pain is also boosting parts of the US economy. But oil is only half the story, because there's another layer that most people are completely overlooking: natural gas. Because the Middle East is also one of the largest exporters of liquefied natural gas in the world. And just like oil, a huge portion of it flows through the Strait of Hormuz. In fact, it accounts for roughly 20% of the global LNG supply. And countries like Qatar and the United Arab Emirates send more than 90% of their LNG exports through that passage. So if the strait gets disrupted, it's not just oil markets that tighten. Gas markets tighten too. And once again, this is where the United States steps in. Because over the past decade, the United States has quietly become the largest exporter of liquefied natural gas in the world, which means the same pattern repeats. One region loses supply, and another steps in to sell it. And the markets are already reacting to this, which is why we're seeing energy companies rise and exporters benefit. Venture Global, one of the fastest growing LNG exporters, has seen its stock jump nearly 40% over the past month. And Cheniere Energy, the largest LNG exporter in the US, is up nearly 15%. And on the crude oil side, we're seeing the same pattern. And that's because scarcity doesn't just create risk, it creates opportunity. So if the disruption in the Strait of Hormuz is quietly giving the United States leverage in global trade, then the next question becomes, who is the biggest loser? And the answer is China. But this is also where things get more complicated, because China saw this risk coming, and they've spent years preparing for it. They've been actively diversifying their suppliers, building strategic reserves, and expanding imports from countries like Russia, Brazil, and Venezuela. But even with all of those safeguards in place, they haven't fully removed the risk. They've only delayed it. Because China is the largest importer of oil in the world, they consume around 15 to 16 million barrels per day, and roughly 11 million of those barrels are imported. And a large share of that comes from one region, the Middle East, flowing directly through the Strait of Hormuz, which means the safeguards they've built don't eliminate the risk, they just buy time. because in the short term, China can likely absorb the shock. In the medium term, they begin drawing down their reserves. But if the disruption continues long enough, that's when the real problems begin, where it shifts from an inconvenience into a structural issue. And that's because China doesn't just use energy, it runs on it. From manufacturing to exports to industrial output, the foundation of China's economy depends on a constant flow of energy, and when that flow gets disrupted, the pressure starts to build. Which brings us to the part of the story that almost no one is talking about. And the main takeaway from all of this, because if you zoom out for a moment, something about this situation starts to look unusual. Not the conflict itself, because conflicts happen all the time, especially in the Middle East, but the timing, because right as tensions around the Strait of Hormuz began to escalate, trade negotiations between the United States and China were reaching a critical point. Whether it was tariffs, technology restrictions, or supply chain decoupling, for years, the economic and political relationship between the world's two largest economies has been slowly breaking down. And maybe that's where the real truth of this conflict actually lies, because maybe negotiations aren't just about finding solutions. Maybe they're about leverage, and if that's the case, then leverage comes from pressure. Economic pressure, market pressure, and sometimes even energy pressure. And once you start looking at the situation through that lens, the Strait of Hormuz stops looking like just an energy story and starts to look like something else entirely, a geopolitical story between China and the United States. Because if one country can absorb the shock while another starts to feel structural pressure from it, then the shock itself becomes leverage. Which means maybe the Strait of Hormuz isn't just a choke point for oil. Maybe it's also a choke point for power.